time for FOMO. So we are looking at Tesla today. I'd say objectively one of the biggest stories of the day, down 10.4%. So it's eased off of session lows, but I mean, still brutal move to the downside, one of its worst in almost 6 months. Joining me now to discuss more on Tesla and their quarterly updates, Diane King Hall, as always. So Diane, walk us through the good, the bad, the ugly. I'd say I listened to the earnings call. It was short for Tesla, so me personally listening, I was thrilled. But then I saw all the negative feedback, and I was like, I kind of get it. I kind of get it.
Yeah, I mean, look, it's a difficult day. You said you mentioned that shares are off the lows of the session, but not by much. And think about where Tesla was heading into this print. It started to generate much more bullish sentiment. Investors were excited about kind of the future of Tesla, robotaxi, which Musk talked about obviously on the earnings call as well. But let's get into the numbers really quickly. So adjusted EPS was 52 cents a share. That was much weaker than expected. But under the hood of that had to do with in part the charge that it took. It mentioned back in April that it would take a charge due to those layoffs that it had to do. But another piece of the puzzle is the competitive landscape and the pricing and price cuts that Tesla had to do to move some of the deliveries. And auto revenue actually declined on a year-over-year basis to $19.9 billion, and margins also declined as well. Now, total revenue increased to $25.5 billion, and part of that had to do with some growth in energy storage. That was a bright part there. On the cause, I'm sure you heard this, Jenny. Elon said there have been quite a few competing electric vehicles that have entered the market, and mostly, he claims, they have not done well. To be fair, Tesla continues to be the leader in EV, but there's been deceleration in general and adoption there. And he also said, but they have discounted their EVs quite substantially, which has made it a bit difficult for Tesla. He said, quote, we don't see this as a long-term issue, but really as fairly short-term. It does not look like investors agree to that. And then he quickly pivoted to talking about the robotaxi.
Some news recently came out and shocked the EV industry, and that is the ongoing drama between Rivian and Tesla. Reports came out claiming that Rivian pushed its employees, who were Tesla's previously, to share internal data of Elon Musk's firm. Such news is not the first of its kind, and only adds to the fuel of this everlasting rivalry. Rivian had denied these claims in the past, and they still deny it to this day, stating that they have policies to prevent this type of actions and behaviors from ever taking place, and saying that such demeaning acts do not comply with the company's values at all. This fierce sparring underscores a long history of competitiveness between Tesla and Rivian. While Tesla is a well-established player with a broad range of EVs, Rivian focuses on electric trucks and SUVs, targeting the adventure and off-road segment. So, what fueled this fight between the two titans? That's what we will go through in today's video. But first, if you want to keep up with Tesla's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market. So click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Diane, when we look at this, I think it's just like the shock factor that Tesla oftentimes will bring. It always has a million headlines, earnings or not. It's down 10% today, but it's still up nearly 20% in the last month's trading. If you go back 21 trading days and sort of call that 1 month, it's just so volatile. I think it's such a big company that's so volatile, obviously has a CEO that is so public and well known. It's such a heavily traded stock. I mean, I think today people are saying, hey, Tesla and Alphabet are taking down the market. Is that the sentiment around Wall Street today?
According to a tentative ruling issued by a California judge, to everyone's shock, Rivian is facing some significant legal consequences, and the company is set to go on trial, accused of encouraging former Tesla employees to share Tesla's trade secrets. This legal battle stems from Tesla's allegations that Rivian hired its employees in the first place with the intent of acquiring confidential information, and the judge's decision to advance the case to trial suggests that there is substantial evidence to consider these claims seriously. Of course, such severe escalations have had immediate financial repercussions for Rivian, with the company's stock price falling by more than 3% in pre-market trading right after. The scandal has not only impacted Rivian's market valuation, but also highlighted the intense competitive pressures and high stakes in the electric vehicle industry. Both companies are fiercely competing for technological superiority and market share, making the protection of intellectual property a very critical issue that must be prioritized. The super-anticipated outcome of this trial could have far-reaching implications for Rivian's reputation and operations, as well as broader ramifications for employment practices and trade secret protections within this industry and probably others, as such actions might take place wherever you can find a high-level competitiveness. But that's not all of it, because Judge Theodore Zahner has something to say about it. So, let's find out what he said exactly. Hello everyone, and welcome back to Investocracy.
Yeah, that seems to be the sentiment in general because there were high expectations coming into this. These are the leaders of, in terms of the release of their quarterly report cards of the mega cap tech stocks and the Mag 7. So it kind of creates this murky picture about what will results look like for the rest of the Mag 7, especially when you think about AI. And Musk talked about that a lot on the call. Here's what analysts think about the results for Tesla. Citi said underlying second quarter results were somewhat worse than expected. We saw that by the numbers, saying that there are positive catalysts on the horizon. He highlighted the robo-taxi event, which we now know as 1010, October 10th, and the low-price models with which Musk talked about on the earnings call, that those more affordable models will be slated for to be revealed in early 2025. So that could be something positive on the horizon for Tesla, but he said the softer second quarter auto margin reinforces the importance of those catalysts to support near-term sentiment. He has it as a hold, but he cut his price target to $258 a share from $274. Baird maintained a buy rating on Tesla. They have a $280 price target. He says next year is coming quickly. To be fair, it is. So he did acknowledge the weakness in the results, but says the timelines remain intact when it comes to the robo-taxi unveil and the next-gen vehicles. And he thinks that alleviates, Baird thinks that alleviates concerns of a longer-term push-out. Wells Fargo, not as positive as Baird. They're saying the second quarter had no razzle-dazzle, saying that investors now focus on the weakening fundamentals that we are seeing. Now, there's another, kind of piece of the puzzle that didn't come up that I saw with regard to the earnings call, but Rivian heading to court to battle it out with Tesla. Tesla says, hey, you poached some of our employees. That exposes our IP. So there are challenges on that front for Rivian in particular because the judge says this basically can proceed.
Judge Theodore C. Zahner of the Santa Clara County Superior Court denied Rivian's motion to dismiss the lawsuit, saying that Tesla's evidence was sufficient enough to warrant them a trial. The judge has also added in the tentative order that Tesla's evidence establishes that some Rivian employees were less thoroughly investigated and not disciplined, basically saying that Rivian's top management could have done something about it, but they just decided to turn a blind eye. This implies that these employees got away with the whole matter without facing any consequences, which reflects the seriousness of Tesla's allegations. As a result, a stage will be set on trial for a detailed examination of the practices and policies at Rivian during the upcoming trial. The decision to proceed with the case highlights the importance of rigorous compliance with employment and trade secret laws in the United States. A final hearing is set for Wednesday in Santa Clara Court, and this trial will probably end the legal battle that began in 2020. And while Rivian did indeed present evidence of its investigation into the trade thefts case, the judge found that it did not conclusively establish that an investigation was adequate. This ruling suggests that Rivian's internal review may have been insufficient in addressing the alleged misconduct, whether it's on purpose or not. Rivian has previously denied the allegations, maintaining that it has policies in place to prevent the misuse of proprietary information. Amidst these developments, Rivian declined to comment, while Tesla did not immediately respond to Reuters' request for comment. The upcoming hearing will be crucial in determining the next steps in this high-stakes legal confrontation, which has significant implications for both companies in the fiercely competitive electric vehicle market. So, how would this affect Tesla stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So this is a really interesting story to me, Dan, because to me, it's like when you have mass layoffs, like Tesla earlier this year had its largest layoffs ever. I know it's all relative because it's also the biggest it's ever been. So the layoffs are of course larger, but I just know from looking at some of like the LinkedIn posts of their like executives, I mean, there was a lot of turnover to a name like Rivian, but that to me makes sense. It's like the natural transition, I think, to go to a similar company. So, I mean, is there any thinking that this won't hold up in court? I guess not if a judge is it's already somewhat underway, correct?
I mean, look, it's possible. I mean, you think about in situations like this, you have these key man contracts, these non-competes, so you have to often sit on the bench a little bit longer before you can go to a competitor. So that could be one of the challenges that comes up in court. If there's paperwork tied to, let's say these are, key employees that went over to Rivian and that exposed their IP, then that potentially lends itself to being supportive of Musk and Tesla's argument that, you poached our employees and that hurts our piece in terms of the competitive landscape.
Yeah, and I think that that's a good point as well. I mean, you're right. Obviously, we'll have to see how this plays out. I'm just fascinated because I'm like, you laid people off. Obviously, there's certain instances in which I'm sure we'll learn about what that happens. But we will leave it there. Great insight, as always, Dan King-Hall, senior markets correspondent for the network. Great breakdown of all things.
A favorable outcome for Tesla in its legal battle against Rivian could significantly alter the competitiveness in the electric vehicle market, ultimately benefiting Tesla's stock. And if Tesla prevails, Rivian may face substantial legal and financial consequences, such as an enormous compensation to Tesla and increased legal costs, which could strain its resources and divert focus from its core business activities like production, marketing, and innovation. Additionally, potential restrictions on Rivian's employee hiring practices would undoubtedly hinder its ability to attract top talent, eventually weakening its position in the competition. This weakening of Rivian could reduce the competitive pressure on Tesla, allowing it to capitalize on opportunities in the market, especially in the electric truck and SUV segments where Rivian has been gaining traction. And with a less formidable rival, Tesla would definitely capture a larger share of this lucrative market, solidifying its position as the dominant player in the EV industry. Such an outcome would likely be viewed positively by investors, potentially driving up Tesla's stock as confidence in the company's market leadership and competitive edge strengthens. So ultimately, this would definitely benefit Tesla in the long run, making its stock potentially a very good buy, as it will gain an even larger portion of the market. But what do you think about Tesla stock? Is it a buy at the current price? Let us know your thoughts in the comments section. And don't forget to tell us what your valuation for Tesla is. If you would like to know what companies like Tesla have been up to these past few days, go ahead and click on the next video on your screen. See you there.